I'll throw you a bone here. Yeah, I made a mistake, and the mistake was I was too early, okay? And what has been missing from the last month, month and a half of trading is there has been no capitulation. But what I submit to you is, number one, I'm not going to worry about being early. But the bigger issue is you're down 7% in 2.5 trading days. 7%. Now, I look at the market where it is right now. I look at 2023 earnings, $250 estimated right now. You're at 16.8 times those earnings. You're down 7% in 2.5 trading days. This feels a lot like capitulation to me. Where my mistake was not waiting for capitulation. That said, I feel very good. You said there's nothing really positive to sink your teeth into. I think you're missing where earnings are. And that's an easy thing to mistake because you can focus on Netflix or you can focus on IBM, which, by the way, now has a higher market cap than Netflix, or you can focus on the airlines, or you can focus on TSA traveler counts and revenue per available room rate at hotels. The economy is in great shape. And I'm tired of people saying, yeah, but where is it going? Because I've been hearing that for 3 months. It's in great shape. It shows no sign of cracking. And that means earnings, which are coming in better than expected, are likely to continue to do so. The effect of the Fed is painful, but how much more aggressive can they get? If you're negative this market because you think the Fed's going to get more aggressive, that's a pretty tough call to make.
Very much so. I mean, look, I did not expect you to show up today and say I made a mistake. I didn't. Not that you're not a contrite person, and not that you wouldn't.
No, look, it is what it is.
Not that you wouldn't
It's staring me in the face, right? The market's at 4208, the S&P 500. You asked, are the lows in play? Well, we're 2% off of those intraday lows, so by definition they are. But I'm not selling a darn stock here. I see the results coming in, and this is what gives me comfort. I don't care if it's Cliffs, Dow's, Alaska Airlines. These results for the companies I own are fabulous, and their guidance is fabulous. Yeah. I wouldn't sell a stock that I own.
I mean, I don't want to make a big joke about this either, because, I mean, real people's money is on the line. So save the bad jokes. Looking at the upper right-hand square, just saying. Bryn, I was too early, is what Jim said. The question is, I knew you'd like that, Weiss, is how too early, right? How early? Is now safe to buy stocks in the market or not? Are we going much lower?
Well, it depends what stocks you're buying. And I think that everyone's going to come out today and say, and over the next couple of weeks, that earnings are going to be strong. I think earnings will be strong. But what we don't know is what will the market pay for those earnings? And when Powell came out last week and really echoed that 50 basis points is in the cards, I think the market just does not understand when they are going to stop raising rates. And you have to go back, Scott, and understand that we have 1.8 jobs available for every one person that wants one. The Fed is squarely looking at that statistic. And as long as the economy stays that strong, the Fed will continue to stay hawkish. Now to your question about are we at a bottom? I think we're getting really close to a tradable bottom. We're right on the heels of where we were February 24th. And so as a trade, I think we're getting close. But I think it's just a trade. Because the Fed, once again, if you go back to 1913, the beginning of the Fed, they have only engineered a soft landing around 10% of the time. And Scott, those 10% of the times they engineered a soft landing, you did not have debt to GDP at 125%, and you did not have the Fed's balance sheet at $9 trillion. And so I just think we have a set of cards that investors just need to be cautious and be patient. And, you know, equities will do better in inflation than being in cash. But that doesn't mean that's going to be a fun ride while we're in this point of the Fed, you know, raising rates quite aggressively and also trying to reduce that balance sheet.